Hey everyone, Sean Dawson here from Julie Harris Realty with your June 2022 update. I'll jump straight into it. Here we are, Corelogic. Now, despite potentially what maybe a lot of people out there were thinking and certainly despite what I was contemplating, Brisbane hasn't seen a peak yet according to Corelogic. Now, keep in mind obviously that these Corelogic indices are always a bit behind the current data. So this is obviously the difference between April this year and May this year. Of course, we are into June now, and we won't know about the current month's data until the end of this month. But despite bigger markets in Sydney and Melbourne now declining for, I think, the second or third month in a row, Brisbane has still seen price increases in all segments, and that's obviously strata and townhouses and freehold homes. So without further ado, we'll get straight into it. So the change year on year, so the difference between May 2021 and May 2022 for all dwellings that are tracked by Corelogic in Brisbane, the change is a positive one of 27.8% up, and so that's this. Keep in mind, this is Greater Brisbane as well, so this includes your Brisbane City Council, Logan, your Redlands, your Moreton, and your Ipswich Council. So all properties in that Greater Brisbane area are up 27.8% year on year, and then the difference between April 2022 and May 2022, so that 1 month difference, again, that same segment, all properties up 0.8%. Now, coming into houses, the year-on-year change, all houses up 30.2%, and then the month-on-month change, all houses up 0.8%. And then units, so strata, townhouses, etc. The change year-on-year, so the difference between May 2021 and May 2022, all of those properties up 15.7%. And then the change month-on-month, this is an interesting one, the change up 1.2%, which for the first time in quite a while, to my memory, the month-on-month price increase in strata properties has been stronger than that of freehold homes. Now, there are a couple of factors that probably do inform why specifically that's happened, but it's probably more related to the fact that, to be very fair, the freehold home market in Brisbane now is very close to exceeding the $1 million median mark in general. And there are just a lot of people now that can't necessarily afford that. So what do you see? You see a bleed down to predominantly first townhouses and then units after that. So that would probably explain why now there are a lot of people that can't necessarily afford a freehold home in the Greater Brisbane area. So they are opting to downgrade into that that strata property. And in a lot of instances that we experience, a townhouse with 3 bedrooms, 2 bathrooms, ideally 2 car spaces if they're available, and a courtyard for the dog and the kids. That's what we're seeing. Now, whether or not this growth continues is a very tricky one to predict. Obviously, that growth I'm talking about occurred despite the RBA's the first increase in interest rates, the 0.25%. But with that said, and it's just been announced in the last hour or so from when I'm shooting this video, they have put up the rates again, the second rate increase in quite a long time, up by 0.5%, so 50 base points, which is obviously a considerable increase. Now, in my experience, conducting open homes in all kinds of properties across Brisbane in the last 5 to 6 weeks, with that first increase in the interest rates, we did see overnight a switch in a lot of buyers' capability in borrowing a certain amount, and also just the general sentiment and interest in certain properties. From one weekend to the next, we did see a bit of a decrease in attendance numbers, and we did see a bit of a decrease in inquiry online for our listings. Now, you would imagine that may occur again now with this new interest rate increase. Time will tell, I suppose, but I do genuinely think that if you own, let's say, an investment property that you had been holding on to with the speculation that you might continue to see increases, I think that it is, if you have been waiting for that sign to potentially get that property ready for marketing, now honestly would probably be very close to the correct time to do so. There are a lot of factors in the market now indicating that we are close to that peak. I know I've said it a couple of times now, and even if we see increases in the next Corelogic indices at this time next month, I still think that the difference between the sale price for the property now and next month or 2 months would be relatively minimal compared to the risk that you take if you miss that peak, if that makes sense. So, and this is not just me speculating based on the numbers that I'm reading on a piece of paper. We have hard evidence, obviously, when we're conducting our actions as agents on a weekly basis that indicate to us that interest is dying down. Like I said, less inquiry in general across most of our listings, a slight decrease in attendance at open homes, and also too, obviously we're witnessing this, a bit of an increase in properties coming to market in most of the suburbs that we sell in, particularly in Carina, Morningside, Mount Gravatt East, Holland Park West. Lots more properties in those suburbs now coming to market on a weekly basis compared to what they were doing even 2 months ago, or January or December last year. So if you are worried about potentially missing that peak, now may be the time to contact me to get an updated appraisal, and I'm more than happy to help you with whatever I can. I'll leave it at that for now. As we've seen, we still are on the increase, of course, but who knows how much longer that's going to continue. If you would like to have a chat, please give me a call. We can discuss this further. I'm happy to help with whatever I can. 0407 149 757. Thank you.